In today's video, I'm going to tell you how overconfidence can actually affect your trading. Because why? Overconfidence is one of the human components of trading. And it happened to me in real time, this month. For the past 4 months, I've been having a successful trading moment of my life from the month of April, May, June, July, and this month of August. I actually experienced something that I've never experienced since this year. And this is some of the lessons I'm going to be sharing in this video, and I'm going to be showing you how you can avoid overconfidence and what you need to do, because what overconfidence does is that it builds ego around you as you are taking those winning streaks, and that is a lot of ego you're going to build around. And guess what? When things started changing, your mind will not actually accept those things. You actually you will be projecting things that is not in the market, and it will always affect your trading results. And this is what I'm going to be teaching you guys today, sharing with you what's happened to me, what I learned, and what I'm going to be doing going forward. Now, welcome to this YouTube channel. My name is John Bosco, and this is Deep Tutors. Alright, what happened was that for the past 4 months, I've been trading only Euro USD, and I've been having a lot of success trading Euro USD, catching the trends and all the moves happening in Euro USD, and that has actually increased my winning rate and my strike rate significantly. Now, I stopped trading any other pair. I just focus on Euro USD, and when all those winnings were coming, I started feeling invincible. I noticed a lot of things in the charts, things I discovered for myself. I was like, wow, I've actually cracked the code of Euro USD, because I was actually winning so many of my trades until this month of August. I believe for the past 3 weeks, some of us have seen the bearish movement on DXY, which caused a rally on Euro USD and GBP USD. And guess what, guys? I took some of the buys, but when I started trading against the trend, some of the things I used to have in my mind, because when I trade against the trend in the past 4 months, I usually used to get a good result looking at the timing and the things I actually look at before I trade against the trend. They were actually working so well for the past 4 months. But this month of August, which is the first and second week of August, none of these things were working. And guess what happens? I did not accept what was actually happening in the market condition at that time for me to be able to cut my losses short and re-enter the market the following day. I was actually holding on to losses, because of the things I've experienced in the past 4 months. I was telling myself the worst can happen is that I will close the market on a break even. And guess what, guys? Because of this overconfidence and ego I've built around myself in the past 4 months, I did not close my position. And that caused a lot of damage on my profit account, causing me to lose all the profit I made, and not just that, eating into my balance. But thank God I did not blow my profit. Thank God for balance-based profits, because had it been it was equity-based profit, I would have lost it, because I was actually building a lot of ego, and the kind of lot size I was using to trade Euro USD was crazy, and the market went against me, and it was crazy. And it happened 3 consecutive times with these same lot sizes. I was just losing back to back. At some point, I have to sit back and relax. And guess what that overconfidence did to me? Now, it affected me mentally, whereby that when I saw my opportunity to take a trade, I was actually afraid. I was now entering trade with slow lot size or small lot size. And at the same time, I wasn't even that confident to hold positions, until I just have to close the position and have to reinvent myself and tell myself what happened to me was overconfident and actually ego. And this happened to so many traders when you start seeing results. Now, it is called boom and bust cycle. I don't know if you have read this book, which is by Mark Douglas. What's his name, of the Training in the Zone? He talked about a boom and bust cycle of every trader, whereby that when you enter into that state of euphoria, you are winning, you are excited, and all of a sudden you will not think of losses. You start going big in your lot sizes, and guess what happens? It's usually a blast. And this happened. Now, what I told myself, what will I be doing in this kind of market condition? Because it is obvious that this kind of market condition will not be avoided. Now, these are the things I learned. Now, the first thing I learned is that whenever the market goes against me 25 to 30 pips, it doesn't matter what I have in mind, the buyers and the reasons for my entry. All I need to do at that time is to close my position and look for opportunity to re-enter, because it is much easier to recover a 30 pips drawdown than for you to start recovering a 100 pips or 150 pips drawdown because of your ego, believing that the market that is on drawdown will come back to you. Now, another thing again that I learned is that I should be afraid when the market is going against me, and I should be hopeful when I am in profit. Now, all I need to do when I'm in profit is just to do break even and allow the market to do its thing. Now, the problem of trading is that a lot of traders are trying to analyze the market to build a lot of cases why the market will go up or go down. In as much as we want to do all those things, we can actually determine how the market will move. The sequence of uptrend and downtrend, we can actually determine those things. All we need to do is to keep controlling our risk. And let's say, for example, we have entered a trade, for us to be on the safer side, for us not to live in regret. Because personally, if I close my trade because of fear and that trade still go my way, it's actually, kind of pain me. But it is important just to break even. If the market takes you out on break even, it's still fine, knowing fully well that the market wants to eat into your balance, then you just take it out in a just small profit or even a break even. It makes sense than to allow the market to go back in loss. So you can actually do break even and allow your trade to run. This is very, very difficult. I know, as easy as I said it right now, it will not be easy for so many traders, even me sometimes. Now, when you are in losses, you need to do something different. Guys, you need to be afraid when you are in losses. Have an area where you'll be like, oh, once this market gets here, I'm actually closing my trade. And it is very, very important. That ego of not wanting to lose money can actually cost you to lose a lot of money. I think I learned this thing from this guy called Happy FX, because I watched some of the Happy FX video, I think last year, when he lost about $50,000 on gold. I noticed that he started doing something differently, whereby that he usually have 20 or 25 pips, stop loss cap. And when the market gets to that 20 or 25 pips stop loss cap, he takes his trade out. And whenever he's on a good trade or a good opportunity, he maximizes it by putting a lot of lot sizes. And that is how to trade. And that is what trading is all about. By taking advantage of opportunity. And when the market is not going your way, you need to leave immediately. Now, these are the things I learned. Not just that if the market is going against you, you start running away. That's not what I mean. You need to have maybe a structure or an area. You'll be like, okay, if the market is not going my way and is passing into this structure or into this area, I need to take my losses short. It is very important. It can never be overemphasized, because why? The ability to limit your losses and maximize your win, it is how to make money in the financial market, mostly trading. It is very, very important, because if you allow overconfidence from winning streaks to elude your mind, you no longer see things, because why? Market cycles and market trends changes at every given time, and a lot of things can actually attribute to it. It could be economic, situation of the world, what is happening around the world. You can see so many countries are in chaos right now. A lot of things are actually happening. So we need to, as much as possible, be protecting our capital at every given time. So it is important that you understand it, because if you allow overconfidence from winning streaks and you just keep upping your lot size, increasing your lot size, the day it will hit at you, you're not going to like it. Because why? If you take that big loss, the first thing it's going to affect is your mindset. And that confidence that you have, it will just shatter it completely, whereby that you become afraid taking trades. Even when you see your setup, you can't even take it again. You are afraid, or maybe you start doing strategy hopping, thinking that your strategy is not working. No strategy is 100%. Just see every opportunity your strategy presents for you as a chance, not a guaranteed trade. And that is the mindset I'm using to trade right now, whereby that I see every setup or every trading opportunity my strategy gives me as a chance, not a guaranteed trade. I believe you got value from this video. Share this video to someone that learn something from it, probably Forex traders. And don't forget to like this video, subscribe to my YouTube channel, and turn on the bell notification. See you in another video. Bye, bro.